No, this is not the copy of my previous video, and hopefully this time we have sound sorted out somewhat. It didn't take very long until I had to and was able to refer to that exact same video about my sell banks call, which I did about exactly 22 days ago on the October 14th, 2019. And it went along something like that. Are banks a strong sell now, or at least not a buy? So if one is to form an opinion, not financial advice, you would be either selling the banks that you already have or definitely not buying if you're looking to add to your stock market portfolio. You also want to think about your superannuation, and if you haven't touched it, it would probably be in a moderate, which would be heavily weighed most likely towards domestic shares here in Australia, and there would be heavily weighed towards Australian banks. So I would be probably calling my superannuation fund and asking them that. And if that's the case, I would probably go a little bit more conservative in the next few months, maybe 6 or even up to 12 months, be on the safe side, and definitely that way get out of the banks. So get out of the banks, says Economy Times. What has happened since?
Last year, ANZ's boss Shane Elliott declared on this program the golden age of banking was over, and the bank's results today are testament to that. ANZ suffered a 7% drop in full-year profit. It was dragged down in part by remediation costs from the Royal Commission.
Okay, so ANZ, Australian New Zealand Banking Group, down from about 14th of October. We mentioned it. Again, doesn't make it a trend, doesn't make it a 100% good call, but in any case, it definitely didn't go up. So that's ANZ, but there's more.
Profits plummet and dividends slashed. A bad day at the office for Westpac's boss, turning down a $4 million bonus.
Should investors be prepared for profits to continue to fall from here?
Well, I can't give any guidance on what's going to happen to earnings in the future. What I can say is clearly the environment is very challenging for banks.
I'm not sure about how the CEO can't give the, how did he explain it? Can't give any guidance to the future of the earnings. I think that's called forward earnings. So they've got to have some sort of a plan of the earnings in the future. So in any case, not a good day for the second out of the four big banks in Australia, this time Westpac.
It's a shocker of a result overshadowed by rising compensation costs from the shabby treatment of customers and the threat of big fines from regulator AUSTRAC. Net profit came in at $6.8 billion. The bank slashed the final dividend to just 80 cents per share fully franked. That's down from 94 cents last year. Westpac also announced it's tapping the market for an additional $2.5 billion to ensure it's got enough cash to cover remediation expenses and capital requirements. The capital raising put shares into a trading halt today.
I mean, shares of one of the four big banks in Australia put on a trading halt. I'm sure it's happened before. It's not a big deal, but it is kind of a big-ish deal. You normally expect these things to happen with a less stable, less blue chip companies, banks, any industry. But nevertheless, it happened to Westpac. A very good point. Next point is about the delinquencies. Very good question.
This time a year ago, your 30-day delinquencies are up 15%, your 90 days are up 22%, and realised mortgage losses are up 50%. Now, I know this is off a low base, but is this a concerning trend given that we've got interest rates just coming screaming down to levels that we've never seen before?
Very good question. I mean, the interest rates are going down, property prices are going up. You wouldn't expect, especially that the interest rates are going down, meaning that the servicing of the mortgages has gone down weekly, monthly, yet delinquencies and people having trouble paying it off, which is what delinquencies are on the rise. What is going on? Although the question was a lot better than the answer, to be fair to the CEO of Westpac, let's see what he had to say to that.
I'm not overly concerned about it. We said for some time now that we thought delinquencies and losses were about as low as as they could go. So a little element of normalization is what we'd expect. The numbers are really very small and mostly explainable by a slowdown in the housing market, meaning that it takes a bit longer for people to clear a loan than it might have done in the past. And so your delinquency and your loss rates are essentially a flow of things coming in and things going out. It's taking a bit longer for things to go out, but we're not seeing an increase of things coming in. So, you know, I'm not overly concerned about it. I think the credit quality is still very strong.
I don't know. I don't buy it, but hey, who am I? Just some guy with a YouTube channel and a day job. And obviously the ultimate test is what the market thinks, not what I think or even what the CEO thinks. But, you know, this is the Monday, 14th October was that video where I said, look, it looks like a very good call to be a sell or short banks. And that's the 1 month Westpac Banking Corporation, Westpac Bank. Share price, this is what's happened in a month. And within a month, about 22 days ago, this is where the price was. This is where it is now. Again, doesn't make it a trend. Was it a good call in short term? So far, so good, correct. What I'm hoping to be able to provide is some sort of a not so much a call of, although it's very important not to lose money, meaning that if you were in banking shares and you got out, you didn't lose money, so it's a good call. But how do I predict or tell you guys what my opinion of financial advice is, what's going to go up and when to get in and buy? Well, that doesn't seem to have come about in any industries that I can think of. But as soon as I have any thoughts on anything, I'll share it with you.
Kyle, how are we expecting Westpac's shares to trade tomorrow morning once they come out of this trading halt?
Well, the signs aren't particularly good. I mean, the results that Westpac delivered were really quite poor. 16% drop in profit over the year, as well as a cut to the dividend from 94 cents to 80 cents. So really, it wasn't much of a strong message delivered by the bank in its results. The numbers weren't very reassuring either. So when we do get the shares opening up tomorrow morning, you would assume after this capital raise is complete, it might be a little bit of a down day for Westpac.
And the $64,000 question, which is the question we most like on this channel, is how is this going to affect the other two big banks, NAB and CBA? We shall see when the next results come out.
And were the other bank stocks hit today as a result of contagion from Westpac?
Absolutely. So some of the themes that really were fleshed out of the results today were applicable to the broader banking space and have been discussed quite recently coming out of ANZ's results last week, as well as just the broader commentary at the moment as it applies to the financials. And that's in a low growth environment with RBA cutting interest rates and then obviously the ongoing remediation costs associated with the Royal Banking Commission, that the bank's bottom line's really being eroded by those factors. So today it was the financials that really weighed on the market and what was otherwise a fairly robust day's trading.
There you go. The banks are just not looking good. So ANZ down, Westpac down as far as, well, the share price and the results that they've released just recently. And we've got two more, NAB and CBA. Let's see how we go there. Okay, I'll stop it there. Thanks all. Talk to you soon.